New Zealand property prices have crashed more than 20%, but what if we told you the real drop is actually more than 40%? Mike Taylor from Pi Funds is here to expose what really is happening in the New Zealand housing market and how getting ahead of the curve will fast track you to your financial freedom.
Financial freedom faster, financial freedom faster.
You're dialed into New Zealand's fastest growing real estate and investment channel. If you want to make more money, hit that subscribe button. Mike Taylor is the founder of Pi Funds, managing over $2 billion in investments, making him one of New Zealand's top fund managers. Mike, let's be real. How much trouble is the New Zealand housing market actually in?
Well, in your intro, actually, you make a good point here. You will only look at the nominal numbers, which is a fall of, say, 20-25%, but actually you've got to look at it in real terms, which is how much has your house price fallen, adjusted for inflation, which, as you point out, is closer to 40%.
Yeah, and how do we work that out? Are we looking at in US dollars?
Will probably be even worse if we look at it in US dollars, because obviously the Kiwi dollar's fallen significantly since the sort of kind of COVID peak from about, like 70, 75 cents versus the US back to where it is today, 56, 57 cents. So it's probably a little bit scary to look at it on that term, but let's just look at it as, hey, if you live in Wellington, it's probably fallen 25% in nominal terms since the peak. And then when you adjust for inflation over that period, which is, prices have risen probably cumulatively, maybe sort of 15%, then that's how you arrive at your 40% loss. Yeah,
but it's pretty dire. So if we figure out how this all happened, we could blame our global pandemic, but we can also say, hey, look, some of this was engineered by the reaction of the Reserve Bank.
Yep.
What are your thoughts of how the economy has been handled and how things have been managed by the Reserve Bank over the last 5 to 10 years?
Look, I think nobody knew what was happening in the world in March 2020, and it was the right thing to do to cut interest rates and provide, stimulus, and whether it be monetary or fiscal at the time. What happened subsequently was, of course, multiple lockdowns, which in the end proved unnecessary, and then the government and the Reserve Bank kept the stimulus tap on for too long. So they blew a massive bubble in various areas, including the housing market, and then they decided to deflate that bubble in dramatic fashion by hiking rates the fastest they've ever done, and just basically pulling the rug from borrowers. And I think when interest rates fell to zero, there was an expectation that they would sort of remain there for a while, not necessarily ratchet back up to, 5%. And some things were outside their control, like a war in Ukraine and, rising commodity prices and stuff. But generally, if you look at what the Reserve Bank did, they were continuing to buy long-dated government bonds way past the point when they needed to, and giving the banks cheap money. So, yeah, I think whilst it's not 100% their fault, they have a big part to play.
A reminder, if you're determined to outsmart every other New Zealand investor, smash that subscribe button and join our elite circle of market trailblazers ready to dominate the game. So the way that the Reserve Bank and government interact, there's supposed to be a separation, right? Now, my understanding is that you go back, the Reserve Bank funding used to be around $50 million a year to run. And then through 2020, that increased from $50 million to $111 million. And then in the years following, up over $160 million of a funding line from government to run the Reserve Bank. With all that extra funding and the new mandates that the government of the day had given the Reserve Bank, is that a way that they can control the Reserve Bank, influencing with more money and more direction?
Well, I guess they gave them more responsibility, and more responsibility is, more power in some ways. Their staffing levels went from sort of 200-ish to over 600 at the current levels, which is crazy growth when you consider that we're trying to now cut back in the public sector in Wellington. So I actually see the last couple of days, there's been some noise from Nicola Willis that they're going to look at the Reserve Bank costs and consider cutting them.
Yeah, I mean, it certainly makes sense that if the Reserve Bank was running on 50 million a year, that they could do that again, even adjusting for inflation down to below 80 million, which is half of what the cost is now. Now, what does the Reserve Bank do? What should they be doing if we want happy, harmonious, growing economy?
Well, the Reserve Bank has said that the neutral rate is around 3%. So if we're currently sitting at 3.75, then we're well above the neutral rate, and we know that we've been in recession. So the question is, from me, is like, why are we still in a restrictive territory?
Yeah, and why not go to 3% as soon as possible? Yeah, and even if the neutral is 3% and we don't have a growing economy in the way that we do, why not go below?
Oh, 100%. Yeah. I mean, the first thing to do is get to neutral, wait for a bit, and then see what else you need to do.
Yeah. And for somebody that's a little bit more lay, like, what else does the Reserve Bank do? They manage, they oversee banks and insurance companies, as I understand it.
Yeah. I mean, I guess they obviously issue banknotes, control the money supply, and various other sort of regulatory financial matters.
So how does this trade uncertainty globally impact growth in New Zealand?
Well, probably not by that much. We don't export a heck of a lot to the US anyway, but just generally it's creating a lot of uncertainty around the world. Maybe New Zealand will be on the list next. But for all our other trading partners, whether it be Europe, China, it's just creating confusion and a bit of chaos as to, if you've got a business and you've got operations in Mexico, or you've got operations in China, and you need to deal with the US, what are your terms? Like, it's pretty hard to navigate this.
Yeah. Well, I was reading a lot of information about the expectations around our reliance on housing to prop up, people's wealth building in New Zealand. And it certainly appears there's a lot of evidence to suggest that house prices won't increase at the rate that they have for the last 50 years for the next 20 to 50 years. And that people really should be investigating other options on how to build wealth and considering other things. Now, how do you guys advise clients to think about diversification and to consider global options, not just investing in New Zealand?
Yeah, I mean, New Zealand, we are an island nation, 5 and a bit million people at the bottom of the earth. And as we've seen the last couple of years, if all your assets are in New Zealand and on the NZX, New Zealand property market, and you've got nothing else, then you become significantly poorer in the last few years. Whereas if you'd had US stocks and exposure to US dollar, you would have done pretty well. So when we talk about a diversified portfolio, we talk about people owning their own home, having a KiwiSaver account, and then building up savings, which they can invest in things like shares outside of New Zealand.
Yeah. And I see that a huge amount of the success in the funds that you guys are managing has been because of allocations to small caps, industrials, commodities, and just these international options. I'm guessing, maybe off the top of your head, do you know what you guys have got allocated to investment options outside of New Zealand? Is it like 80-90%?
Oh, it would be higher than that. I mean, we've got, 2.2 billion, and then I would say there's probably only 50 million invested in New Zealand.
Yeah, so that's telling in itself, right?
Yeah, I mean, some managers have a bit of a home bias to NZ, and maybe that's what their clients want, but ultimately we're trying to give the clients the best return. So that means we need to look outside NZ.
A reminder, join our revolution of innovative New Zealand property investors by subscribing today. Get access to game-changing strategies and insider scoops that put you ahead of the curve. How does New Zealand look around the world and say, we need to keep growing our our economy. We need growth. Where's it going to come from? It's not going to come from dairy and meat and tourism. I guess it needs to be about investments that we can export in a cheaper way.
Yeah. So if you look at other successful small countries, like say Switzerland, Denmark, places like that, they have businesses where they create a value add in a product. So Switzerland has got like Nestle, it doesn't just sell like sort of raw materials like we do with our milk. It's like they turn it into chocolate, and various other things. You look at Denmark and they've got, Novo Nordisk, which is the company that makes the, weight loss, drugs.
Yeah.
It's just been massive for the country. So what can we do is we can invest more into R&D. And I think actually at the moment they're doing the opposite. They're taking funding away from the Callahan Institute. So yeah, to me, it feels like we need to spend the next decade or more investing into R&D so we can help develop those types of companies in the next 10, 20, 30 years in NZ. We can redistribute the way the government funds everything, which is said is to not be paying money to people who don't need it.
Yeah, which increasingly we're doing more and more each day.
I mean, the other point I would add is that we in terms of property, is we know that most of the housing stock is held by that group as well. And it's sort of I guess that's capitalism, but it's slightly unfair that group has held all the wealth and it hasn't, they've had the opportunity to grow through inflation and all the property boom, whereas people, say our age and younger, are in a slightly different situation. You can't go out and buy a house for 150 grand anymore.
Yeah, and that locked capital that's not doing anything.
Yeah.
And often those houses are not being improved. No, they're just kind of rotting away. So let's have another look at how other ways we can make money, not just in the housing side of things. If people wanting to research how to allocate money into, say, industrials or commodities, things like gold, like what are good places to start? Where should people look to start doing this research?
A great way, I guess, is to use the AI models. So pretty much anything you want to know quickly, you just use your preferred LLM. So, say, for example, use ChatGPT, put in there what you need to know, and that's going to give you a great place to start and further links if you want to do a bit of a deeper dive.
Yeah. And are there like specific industrial kind of like funds that you like to just track and look at each day to say, oh, this is what's going on? Is like an industrial in Australia, for example, like reports to read? Or
yeah, I mean, there's good places to get information in terms of news information that I like to consume. You've got like the Wall Street Journal still, The Economist, Financial Times, in Aussie you can look for the AFR.
It's funny with the media the way it is now. You're still relying on those long established media players.
Yeah, it's interesting is that they do. The thing about it is that they do write good articles, which you can kind of read in a longer format when you have time. If you want news quickly, I tend to rely on like news wires like Bloomberg, which pump out the news continuously.
Yeah.
And it's up to you to interpret it.
And what are you guys doing in terms of keeping an eye on the crypto and small caps? Like, how do you guys research things and look at things that maybe you're not allocating much to now, but you're considering for the future?
Yeah, so crypto, we just look at flows that are going in and out of the ETF market in the US in particular, and also the money supply. Crypto's had a fairly strong relationship with money supply over the last 10 years. So when money supply is shrinking, crypto's finding it tough. We're also tracking things like investor sentiment and momentum. When we're recording this podcast currently, there's a bit of a sell-off in crypto and global sort of momentum names, and investor sentiment has really plummeted in the
Yeah.
last couple of weeks. So that's another thing to keep an eye on.
So to prop up the New Zealand economy and keep things growing in the way that we think that we need, I'm guessing you're campaigning for OCR 50 or 75 point drop in April, despite what they're saying that they were going to do 25 point drop.
Yeah, I think what I want and what you want is not necessarily what's going to happen. It's going to be probably as flagged, 2 more 25 basis point cuts. They do talk about, tradable inflation and what's going to happen globally with tariffs, and do they need to worry about inflation ticking back up again? So, yes, in 2 more meetings, we should be at 3.25, and then we'll see.
Yeah. Well, it's great talking to you, Mike. I do recommend people follow you along on LinkedIn because you're posting regularly about interesting things. And people can just subscribe to the Pi Funds newsletter on your website, I'm guessing.
Yep, absolutely.
And what kind of people do you typically work with, investors in Pi Funds?
All range, I guess. We do everything from a KiwiSaver account with someone with no money, right through to someone ultra high net worth with 50, 100 million. So we've got different products tailored to what it is you need.
That's great. Well, I look forward to talking to you again, Mike. Thanks.
Thanks.
More cash, passive income coming fast. Make your money work for you. Live the dream, it's overdue. So don't just wait, take control. Mortgage HQ will make you bold. Financial freedom's in your hands. Take that step, it's time to